Okay, I think we can get going. Good morning, how are you? It's Wednesday, September 2nd, 2015. This is your daily Forex trading strategy session. My name is Wayne McDonell, the Chief FX Market Strategist for TradersWay, an ECN that allows you to trade everything you possibly want to be happy, healthy, wealthy, and wise, including Forex, energies, metals, indices, and binary options. We do these sessions a couple hours before the stock market open in New York City on Wall Street. So this is a chance for us to either align our satellites or sharpen our swords. Welcome one, welcome all. Hey, if you're watching this as a video, don't be a lame-o and leave a like, all right? Seriously. Even better, leave a comment, let us know what you learned, what you like. Hey, it's Wednesday before non-farm payrolls. It's time for another dumb prediction. ADP report, another dumb prediction. So we got that on our agenda and so much more. Let's get going. Got another thing coming. Hey, trading risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. Never risk money you cannot afford to lose. Don't touch the stove. It might be hot. You could burn your fingers. All right, so I'm going to probably have to mess around with my charts from time to time because I moved over from my old trading PC to my new trading PC. And, you know, it has its problems when you do stuff like that, right? I don't quite have it fully up and running, but here I'll pop open the personalization window. Come on, Windows. So this is how far I've gotten so far. How cool is that? You can see I got a couple missing. Have you ever heard of a 4K TV? Well, this is a 10K. Yeah, 10,000 pixels wide. Booyah! So I got a couple missing here, and I got help on the way. Don't you worry about that. But, you know, transferring everything over, I had 20,000 files and and all that kind of stuff. Then you got to reinstall all your software. Oh my gosh. But anyways. Yeah, how do you find your mouse? I don't think you can tell, but I can hit a button and it highlights. I also have a special mouse, as you know, maybe you might know from 2 weeks ago, but my old mouse stopped working, but I had a spare one ready to go, and they're like $200 each. But I can easily, without doing anything but moving my fingertip, I can drag it across, you know, 7 or 8 or 9 screens, and I'm just barely moving my fingertip, which is cool. Anyways, enough of that. So, so that's taken up some of my time recently. So let's look around the world here. What do you think? Is it still a downtrend? Yeah. Well, you guys are chit-chatting in the window about the peg. And yeah, it's a problem for those that are pegged. But you got to remember there's a reason why they're pegged, because they can't manage their economy themselves. That's why you peg it. You're basically, you know, renting a central bank. So But just like China, and we've talked about it a lot, just like China, there are many countries pegged to the dollar that suddenly, and I don't know why it's news now, but suddenly realize the dollar's is unbelievably strong and is going to remain unbelievably strong. You know what's interesting though? You know how I say past performance does not predict future results? When was the last time the US dollar was ripper strong? Like the most powerful currency in the world, bar none. When was the last time that happened? Yeah. No, the 2008 financial crash. Why? If the US stock market was crashing 50%, what and there was no credit in the market and real estate was down and like why? I mean, the US economy was pathetic because it was still a safe haven because of the bond market, because of US treasuries. Because the markets were pathetic everywhere around the world and investors needed to park their money somewhere, anywhere, and you didn't even want to leave it in the bank because your bank could fail. So you bought US treasuries. And therefore you needed to convert your local currency into US dollars, and the dollar got unbelievably strong. So now the US dollar is unbelievably strong, but for exactly the opposite reason. And that's why every day I say past performance does not predict future results. What worked for you in 2008 is doing the exact opposite in 2015. But I mean, again, not a shocker, but it's interesting. And I see it a lot in trading. So we're doing the same thing for exactly the opposite reason and getting, so anyways. So some are pegged to the dollar and they don't like the appreciation. Oh, well. Maybe if you didn't have to peg, you wouldn't have, so. So yeah, I think we continue to have a downtrend here. Lower low, lower high, lower low, lower high, lower low, lower high. And we'll continue that until it stops working. Nice little top in here. You see that? Weekly and monthly central pivot points overlapping. What a cluster. You got another thing coming. USD yen. Still at $1.20, and we've been there for what, 24 hours? Okay. Nice little move down in here. So the $1 million question is, does it head up from here? Right? What? Really? It doesn't let me change? I've never actually done it. All right. Won't let me change. Boop. Boop. So, I mean, that's the $1 million question. And if that happens, it could change everything. Whoa, my love. Oh, my darling. Mm-hmm. Mm-hmm. So, could be interesting. How do you feel about that, folks? Thomas, it's not one or the other. I mean, they're both correct. The Thomas is asking, which are more important, the moving averages on the 4 hour or the 1 hour? Well, they're both important. I mean, none of them are lying, right? All they're doing is measuring the way you're asking them to. So it's how you put them together. Justina says not the best pair to trade. Why is that? I'm thinking it's one of the best pairs to trade. Right? Fundamentally speaking, it's the perfect pair. Highly, well, what Bob is saying is it's highly correlated with the fundamentals, and I kind of like that, right? So what's on your mind, Justinas? Okay, okay, fine. So you just don't like the pattern. I thought you were saying it for a particular reason. I thought you might be saying like the average daily range was lower than many and all that kind of stuff. And if you were putting together a carry trade, you actually want lower volatility. Okay. And it seems like we're on support, right? We've tested this whole area and it looks like it's holding. And I hope by the end of the year we're a lot higher than 120. And 1 year from now, 12 months from now, I hope to be a lot higher than 120. So I don't know. Just sort of hoping that this is the bottom of a bare minimum a range, right? So. Well, Sebastian says you might take off like a rocket, but but yeah. So one of the things I was talking about is the USD yen. Um, if you go out like weekly, I'm not going to have enough data, I don't think. Even then, maybe monthly. I don't know if I don't think I have enough data set on the platform, but at a bare minimum, let's say there's there's reason to believe that it's possible to go to 150. Okay. The next real high is sort of in here, isn't it? 135. So there could be, let's say, 1,500 pips. Right? There could be. Or 3,000 pips. I guess it's 3,500 pips. But if you go back even farther than that, because I'm thinking these fundamentals may line up in such a way that it could be a 5-year move. And I've been talking about this for 2 years, right? But there could be 5 years left in this move, and the top was something like 300. Okay, so I don't know. It feels it feels high at 125, but historically it could go a lot higher. By the way, did anyone buy the Chinese stock market? It's made a 3A2 Fibonacci retracement. I just wasn't sure if anyone was interested in that. I was just, when I was talking, I was thinking about the Nikkei historically and stuff. But, right, the Chinese stock market. No? Don't want to talk about it? All right. What, the Spanish stock market? The ES? Oops. Oh, the S&P 500. Ah, yeah. Okay. That ES. All right. All right. So you're going to buy it? Oh, wait. Clicked the wrong one. Sorry. Where is it labeled on this one? Here it is. This is the cash. You got another thing coming. Okay. You got that one. Ion. You got this one. We'll play. That's probably. I'll play this one. So. Yeah, let's buy it. Thomas, there should be yesterday's is up there. Forex.today. No? Honestly, I didn't check. But I uploaded it. See, look, I'm a buyer of the stock market, guys. Do you know why? The stock market goes up. There's a prevailing wind. Think of it like sailing a ship across the sea. It just naturally is easier to sail in one direction with the wind. The, the trade wind here is up. So it's going up. Ooh, it's going up. It's just a matter of time and place. Time and price, really, right? Oh, Demeter's asking an interesting question like, how do I mess around with that situation that I was in? Which wick to use? What I did here, okay, we have this big wick here and then this. I'm playing this like a double bottom, and like this wick was generally panic, and that this second test was the actual solid support, because you can imagine just a whole bunch of orders were right here. And it came crashing down and boom, popped right up. And it just came and went too quickly. But sort of the calm level support is here, is why I picked it. But it's subjective. There's no hard and fast rule. It's just That's subjective. You choose what you want. Okay. Wouldn't make a difference, I don't think, if you grab this one. Same thing. Okay. But again, no hard and fast rule. But if you were going to draw this as far as what's going to happen next, you could look at it this way: like we're making higher highs, not lower lows, on that higher time frame, and we're at a 618 basically, right? So you can kind of play it like that if you want. All right. Yeah. Question is, trader psychology and stuff. Yeah, I try to share that as much as possible. I don't have like an instant lesson. Sort of instant lessons on trader psychology have to do more with risk management. But, we're talking about global portfolio management. What percentage of investors and financial intermediaries that manage your money for you, what percentage of them make money when the market goes up, and what percentage of them make money when the market goes down? And the vast, 95% of investors and other financial intermediaries make money when the market goes up. In fact, they only make money if the stock market goes up. So there's very little reason for this to come down on the long run. So I've been trying to keep you guys calm and saying this is just portfolio managers adjusting their portfolio for changes in the market that are coming. But it's not the end of the world. Okay, that's been greatly exaggerated. So anyways, you find a bottom and you get ready. And we're going in like September, October, November are my 3 favorite months for trading. So Stephen says, do I expect the stock market to go back down? Well, it totally could. Okay? My question mark has to do with what are people going to do in anticipation of a September policy change at the Fed? And it's a harder one to answer because I don't know what those idiots are going to do. So I just got to play it safe. By idiots, I don't mean the Fed. I mean the dumb portfolio managers that are freaking out because they haven't done their homework. If you're freaking out, you're the dumb money, right? It's like gambling. When you walk in the room, the first thing you should do before you sit down at the card table is figure out who the sucker is. And if you can't figure it out, then you're the sucker. So anyways, I don't know what those suckers are doing. So just looking at gold, I'm happy with it. It's fine. Oil's more interesting, isn't it? So remember, we were talking about here, like I thought oil was too low. I talked about an overshoot. That down here, I just have no idea where it's going. And now we've popped up back above my 42 level. So you see this pattern that we drew months ago? It could be back on, you know. If this stabilizes here back above 42, then yeah, then this was just an overshoot. People were panicking again. People just not knowing what's going on, not having a trade plan, not thinking logically, intelligently, but just freaking out. And all of a sudden, boom, the whole world changes again for them. Now they're freaking out the other way. But it looks like if we hold above this area, then we do kind of work our way back up. Cool. You know, very nice. And then you notice how it's a perfect fib, right? It's like just like what you'd want to see. And this area here, which has been our buy zone for 7 or 8 months, um, you know, is still valid. Just imagine it as a big wick on a weekly chart and then pops right back above. Cool. Right on. Be very interesting to see here if this works out to be the bottom. Look at that, got crude twice up here. Interesting. Sweet. You like kitty cat? You like kitty cat? So this is the plan from what? 2 weeks ago? Up, down, and up. Well, it went up, it came down, and went up. Pretty close to where we extended to, but nothing dramatic, right? But the drama part of this is that, you know, I'm not going to draw it this way, but, you know, it's higher highs and higher lows, isn't it? Now it's slowing down. Oh, it's slowing down. But it hasn't changed direction, has it? Yeah, I'm still bearish for now on commodities. I'm still bullish on the US dollar. All the fundamentals are exactly the same. Now, I hope you're signing up for the fundamentals course. There's a reasonable amount of effort put into that because you asked for it. I think about 10 or 15 people said, "Oh, Wayne, I'll sign up. I'll sign up, Wayne. I want to learn about fundamentals." So I'm just wondering if you're holding up your side of the bargain. Bueller, Bueller, Bueller. So anyways, what I'm suggesting here is the fundamentals are holding up. And it makes sense. And that's what I like about these markets, even though the volatility is high. Um, the fundamentals are solid. The content is excellent. But for the training course, did you sign up, Marcia? Yeah, CRB. You did, Marcia? Right on. Yeah, I think there's 15 hours up there now, and I got to add like the last, I think 3 or 4 I got to write and do. So you know, it's reasonably done. The B, yeah, the BRCB. Wayne, that was BRCB. No, yeah. Let me look it up because the symbols. It used to just be known as the CRB, but these things change. CRB index. Maybe it's now the Bloomberg CRB index or something. The Thomson Reuters Core Commodity CRB Index. So the TR/CCCRB Index. Oy vey, huh? The Cry, maybe? Thomson Reuters Core Commodity CRB Index. Here it is. Daniel, you don't need to sign up. You got it already, Bubba. Part of the prop firm stuff. The pro site already has it. Oh. All right, so if you're not, if you're, will the real Dan Chan please stand up? Okay, the other, all right, Dan. So the fake Daniel, did that happen? So are you guys sharing links? Dude, so you need to log in from forex.today. All right, that's how you get in. I don't know why you would share a link. Not necessary. Tisk tisk. All right. For those that need the training course, http training.fxbootcamp.com. Fundamental analysis training, global macroeconomics education for foreign exchange traders. So you'll learn about financial markets, financial intermediation, money creation, central banking, the history of the Fed, the Federal Reserve banking system, macro and microeconomics, fundamental analysis, currency correlation, advanced strategies, inflation indicators, employment indicators, industrial indicators, consumer indicators, and wrapping it up all together, fundamental trading strategies, all together approximately 24 to 25 hours of training. And I got TradersWay.com to sponsor it so that it's half price for you. So you asked for it, I made it, I've got a sponsor. Now you got to carry your end of the bargain. Yeah. Beep, beep. So we're away from another fundamental event would go, and this would go under employment, right? So we'd have to talk about what employment is, measures of employment, its impact on things like the broader economy, on inflation, so on and so forth. So that would go under the employment side. By the way, a report was published on fxstreet.com yesterday. And let me get that to you. And it's entitled Prepare for and Trade the Employment Situation Report, Non-Farm Payrolls. Would you do me a favor? First of all, it was one of these things where they asked me to write down a few words, and I wrote down several pages of analysis, and I think I over-delivered. Would you care to read it? But since we're going into ADP right now, and then on Friday, non-farm payrolls. And would you please leave a like? Since I did spend several hours doing it. Okay. And this one, I actually go through where you get your information for developing a model for figuring out the non-farm payrolls headline number. I actually show you step by step by step how to create a model and then how to trade the actual news once it's released, which I think is pretty cool. Okay, about 90 seconds away. So anything less than 200 is disappointing. The rumor on the street is smaller businesses are not having a good summer, and that most of the hiring is now from large companies. So ADP is medium size. Oh, here it is, 190, 190. It must have come out a minute early. No, my clock is off. All right, it's 190. 190. So a little less than expected. I guess I blurted it out just in time. A little disappointing on the small business side. Sorry about that. My new PC's clock is almost 1.5 minutes behind. I'll have to make that adjustment clearly. Baltic Dry Index still around 900. So why am I not excited with the Euro USD? And the reason for it is, you see yesterday's low, and yesterday's high. Where are we now? Right in the middle. So the price action is bearish, but the zone we're in is bullish, and I don't know. I guess if you were a bull, you would be buying off of this 112.50, and your 15-minute oscillator is okay with that. Right? So I think the bigger news here is last month was disappointing. Remember that? For the ADP, it was 185. But you know what? It was revised down, lower to 177. So last month's ADP now was 177. Now the shocking thing is, I thought ADP just simply added up their payrolls and could give you a number that didn't need to be revised. But anyways, I think they would know. But anyways, all right. So Kazakhstan's central bank has set their repo rate to 12%. But you have to hold the loan for 7 days. A 7-day loan is 12%. Poland kept their interest rates the same today. Did you guys trade the zloty? Oh, I know you did. You like the zloty? I'm going to flip over here. This is boring town. Let's go over to Aussie. So we have to go all the way back to early last week. We read the meeting from the Reserve Bank of Australia, right? Because they accumulate the economic data and analyze it and make decisions on the value of the Aussie dollar or policies that affect the value of the Aussie dollar, either directly or indirectly. And there was nothing necessarily positive out of it, right? They were not saying, "Oh, whoa, inflation's going to kick in. We better, stop cutting." No, right? Which means down. And then they had an interest rate decision recently, and they made no change. GDP came out, right? So we had GDP yesterday, or last night, or this morning, depending on who you are or where you are. And it was the slowest growth in 4 years. Well, Chris says, why Brazil so weak? It's the same story. Every commodity currency is exactly the same. So in 2 years, the Aussie dollar has lost approximately 25% of its value. The Canadian dollar went from almost 110 against the US dollar. It was worth 10% more than the US dollar. So it went from 110. Wait, I have to go the other way, don't I? It went from 90, right? The US dollar was worth 90 cents to the Canadian dollar. And now it's 132 and a half. I mean, holy smokes. These commodity currencies are moving 25% or more. So the hey-hi, right, the Brazilian real, pronounced hey-hi, is suffering the same consequence as the Australian dollar, the Kiwi dollar, the Canadian dollar, the Mexican peso, so on and so forth. Noki. It's all the same. Only the names will change every day. I keep trading away. So, yeah, it's all the same, yo. Okay, Chris? Also, each currency does have its own thing, right? And Brazil is a little bit of a mess on top of it. But generally speaking, it's suffering the same fate. So here's the Aussie dollar. Now we're down to 70. We were in the 60s last night in the Asian session. So just, do you want to buy it here? You have to make that decision. This is a key turning point, and we talk about it for weeks and weeks and weeks. Last week was the 3rd week of August, which to me was a turning point, right? And, this is where the trends take place. There could be tiny, tiny, tiny chance that ends up being a bottom because of it's a psych level, and that's it. So if it did make a higher high, higher low, you can consider it. But I would assume that that these fundamental trends will continue. And I believe the change in fundamental trend will occur after quantitative easing has positive effects, or what we've called green shoots over the last couple of weeks, till green shoots appear in Europe. Hey, Fernando, you're registering for the wrong FX bootcamp. Yo. Yeah, Luis Mexico's following. Yeah, they're all the same. It's just, that's it. I mean, that's why you should be easily making money these days, guys. I mean, none of this is a shocker, even in the slightest. Let's look at one like hopeful kind of thing. Yeah, Thomas, they tell you. Generally speaking, Thomas, they tell you. So that's why you read their reports. So what was the last number the RBA said the value of the Aussie dollar should be? $75. There you go. So 70 and 75 to a central bank are the same thing. Doesn't matter. And they're not talking it up at 75. They're not saying, oh, well, we're at, appropriate valuations. Actually, they did say that there's room for continued, weakness in the Aussie dollar. Dude, Sebastian's all over this Martin guy. Boop, boop, doop, boop, doop, boop, doop. So, we're still a long ways away from a Kiwi yen buy. It's nice to know that even the long shot guys are playing the pivot points. No, Thomas, I don't think the RBA is intervening to weaken the Aussie. They don't need to. Right? They don't need to. Do 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 do. So I'm just looking there. 21 is clearly below the 55, so on and so forth. We got a centripetal trade here. It's twice the risk, half the reward. So I'm looking for 1, 2, 3s before I start getting giddy. I guess why don't we look at pound? Yeah, Ron, if you like that, put that over on the may consider to buy column of your analysis, right? Open-minded, but let's see a trend, right? One data point a trend does not make. But yeah, that's nice, huh? So if you follow the line here, sort of in this zone, would you sell here? It's been falling for days. No, too late, right? Too late. You're at support. You don't sell at support. And this looks like a mess, right? So does this mean this is all noise, or is this actually trending? You see this over here in the corner? These black lines? It's a clue. Check it out. It's a clear trend down. And I set you guys up on this a long time ago. Okay? All of these lines here are to indicate lower highs and lower lows. So you bring, right? So eventually it's going to break through and pull back and make a new low and so on and so forth. So you can see all we did was make a 50% retracement. It's a lovely little drop. So, you know, it's a possible pattern. You see it now? See it, Justinas. This is why I say you guys should print out your longer term charts so you don't get distracted. How many people are actually doing that? Where you walk in your office and before you even start your computer, or maybe as your computer's booting up, instead of staring at the Windows splash screen, you're actually staring at the charts and realigning your satellites. It should be like a mantra meditation almost. You should be staring at these printouts that say sell British pound, right? So you can see this is clearly fibbed and all that kind of stuff. Selling high is an all right thing. Demeter's got it short at 52. Oh, 52.96. Yeah, that I'd rather you be short at 58, my friend. 52.96. I guess if you traded in here, the drop and pullback. Yeah, I'm a little nervous there, but that's you know, all right. Beep 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 beep. So let's move over to the beast. I think actually we did the beast, didn't we? This is the beast. Boom boom boom. I'll never trade pound yen again. Nice little cluster of pivot points. You see anything bullish? Can you picture what will be? Do, 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 do. Do, 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 do. Do, 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 do. I guess I can't really do it that way. Desperate land. The trader awoke before dawn. There we go. Put his boots on. He looked at a chart from his trading platform, and he walked down the hill. So, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher high, higher low. Could be a change of trend on that, right? Right? You see the change of trend? So for this to work, what kind of market do we need today? A risk on or a risk off? No, risk on means weaker yen. So it's the opposite of what we talked about yesterday. Yesterday we talked about risk off. Risk on means investors globally want to put money into the US stock market and they get out of their safe havens, like the Japanese government bonds, convert it to US dollars, and buy the S&P 500. Or in this case, they're moving their money to the UK. But they're getting their money out of places like Japan. Oh, you want to talk about some Bolly bands? I'll do some Bolly bands with you. And then I guess we got to wrap her up. All right, so let's do Bollinger bands. Is this the right chart to be using? I guess so. All right, so we'll use this one. La 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 la. Me 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 me. 20 dwarves. 20 dwarves. 20 dwarves. Okay, here we go. Bollinger bands. Bollinger bands represent volatility. And in my mind, I think you can also kind of tweak that a little bit and even use them to represent volume. Because we don't have an accurate volume in Forex. Now, your broker might offer you volume, but they only know volume that they have. They don't know the volume that everybody has. It's not like the stock market, for example, right? It's not an exchange where we're not centralized, right? So you couldn't possibly really get a true volume. However, we can get a true volatility because price and time are represented in all brokers on all platforms all around the world, right? You're always going to get the same price and time. So what you look for is when the Bollinger Bands are wide, that's lots of volatility, or like I said, you can use them. In my mind, I often use them as a volume indicator. where there's lots and lots of trading going on here, and the bands are wide, 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 wide apart. When they're narrow and tunneling like this, you see in here how they're really close together? No volume, no volatility. If you traded in here, you were the only one on the planet trading. Can you imagine? Does that make sense? Like, should you be trading if nobody else on the planet is trading? No. But would you know that if you didn't have your Bolly bands on your chart? Yeah, probably not. Okay, so they shouldn't be narrowing like this, and they shouldn't be moving sideways. See how we're kind of moving sideways here? So still not a lot of volume and volatility going on here, but they are wide apart. So people are trading. So it's a modest, mediocre market. And the other thing that we want to pay attention to is all of a sudden the Bollinger bands are generally going up. So this is moving sideways. This lower one will probably curve up. And this candle will go straight up, slam into the upper Bollinger band, retrace, and then head up from there. Okay? So like periods in here, there's just no volume and volatility, and you shouldn't be trading. Now, one secret is every once in a while, you'll get a tunnel like this that goes on for a mile, a country mile, New York City mile. So the longer the tunnel and the more narrow the bands, the bigger the breakout. That's the little trading tip of the day. So when they narrow like this, very unusual, and it precedes a giant breakout. So again, the longer the tunnel, the bigger the breakout. Because there's so much pent up, trading that wants to happen. Now, some people tell you to sell off the top band and buy off the bottom, and that's generally nonsense. Has anyone tried that? Did you buy a DVD somewhere that told you that? And did it actually work? Yeah, it doesn't work. Did you get your money back, Ben? Yeah, well, the problem is some idiot read that in some other idiot's book or some other idiot's training course and then decided to make his own training course or write his own book, and he put what he thought was common knowledge, put it in there and sold that, and what happens is the whole thing perpetuates itself. There's tons of common knowledge that just is stupid, that just clearly never works. So that's not a very good thing. But if you actually, you know who taught me how to trade Bollinger Bands? John Bollinger. So I'll take his word for it, right? Yeah, this 2 standard deviations, there's nothing special about this. But, once you break out of this tunnel, what happens is you ride the band. You see that? And then we lose the trend. But there's a lot of other things going on here. 5/8 crosses, moving average crosses, higher high, that will set up your higher low. And so some would say, look, it's the Bollinger Bands. And then, well, or maybe it's the moving averages, or maybe it's the price action. And I say, you know what, it's everything. Yeah, I think Boris does the double Bollinger Band, but all right. If that works for him, that's cool. Mine's just straight out of the box, straight out of Compton, Bollinger Bands, my NWA trading strategy. Ben, just make it white. Yeah, I don't like the middle Bollinger Band either. Right? I think you could do it this way, and there it is. You see how on MT4 now the middle line is there? Yeah, that drives me nuts. So you go to properties on MT4. Where did it go? Did I just mess it up and add? No! What? It didn't do it the first time, did it? Let me try it. Bum bum ba bum ba bum ba bum. There it is. So what I'll do is I just move it to none and hit OK. Hallelujah! Hallelujah! Yeah, but Igor's like, but sometimes you blah 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 blah. Look, I already have moving averages going on here. You see, I already use the 2155. So throwing on a middle Bollinger Band is just more of the same. So you could, let's say, get rid of 5 and use the Bollinger Bands. You know, just find out what you like, but don't overlap them, right? Lewis, do I live in Compton? Oh, yeah, 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 totally. Moved recently from Long Beach. Before, I was born in England. No, no, no. I'm not from the streets of of, of LA. Welcome to the jungle. We got fun and games. Yeah, it's funny though. No, I live in beautiful trees on a lake, surrounded by golf carts or golf courses and gated communities. I don't live in the inner cities of LA, but that's pretty funny. Oh, you guys are awesome. I liked you. You're crazy. So, anyways, we're getting our little sort of upside price action, leading indicator for a a positive day in the stock market. So maybe let's end the day back on the S&P 500. Oscar's the same Euro USD printing the same new low. But you know what? This is the thing, and I'm sorry if I forget. When I look, you could show me the pound yen, for example, and I could probably tell you what every currency pair on the planet's doing, just based on currency correlation. That's why it's covered in the training course, the fundamental one that I made for you guys. That's actually covered. It's like all of that is obvious. So like pound yen going up, stock market's going up, euro dollar's going down. I mean, just boom, 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 boom. It's all there, right? Oil goes up. Just it's sort of risk on or risk off. It's just there. It's just yeah, totally. So if pound yen goes up, stock market's going to go up. That looks plausible, doesn't it? Okay, very plausible. If the stock market goes up, oil will go up. Seems pretty plausible. Right? What happens if oil goes up? CAD strong, but then the dollar, the US dollar is also strong, right? So that how would that affect things? So if the Canadian dollar was stronger than the US dollar, then it would have to be unbelievably strong, right? Yeah. So the US dollar here is strong, but the Canadian dollar is even stronger than the strong dollar. Wow. So what about CAD yen? It's not a shock. It's all currency correlation, guys. All intermarket correlation and currency correlation. Okay? And it's something that you really need to know and understand, like what moves any individual currency. Okay? You need to know that. So that's why I put it in here on the training course. And my old quantitative analyst, Kurt Worley, does this presentation because he's the best. You just need to know this. So, like, I forget, and this is why I beg you every day to ask questions. So I look at the pound yen, I'm like, look at that, see? And maybe you don't see. I mean, I look at that and I could tell you 9 different trades. Boom. The templates and indicators and stuff, some of them are custom made and some have been purchased and all that kind of stuff. So generally not, Lazaro. Okay. So if you're still learning about fundamentals, at least consider it. Check it out. All right. I mean, there could be a gaping hole in your knowledge. So again, I only made this because you asked me to, so you should sign up. So I guess we're done for the day. I think it'll be a good one. I think we got some action here. I think, you know, I don't know. I think we got the green lights today for some good trading. So, peace on earth. May the pips be with you. May your profits be above average. Remember, today's headline was a disappointment for ADP. And last month, which was a disappointment, was revised lower. But it doesn't matter. Do you understand that? Why is the dollar strong and the stock market rallying? Because it doesn't matter. We're already raising interest rates. That is what matters. What the Fed's doing, what the Fed is deciding to do. Now, we may find out in a couple of weeks that the Fed's not raising interest rates in September and we'll be shocked. Whoa, no. And the dollar will weaken again. Oh, no. And the euro will be strong again. Oh, no. And then we'll start talking about, oh, it'll be October. Oh, it'll be October. Oh, it'll be October. And then in October, around Thanksgiving, the dollar will get ripper strong again. But like ADP is just another dumb prediction. Okay? So peace on earth. May the pips be with you. May your profits be above average. Thank you for hanging with me. Thank you for your loyalty. Wait. And that whole report, the multi-page report I wrote about how to prepare for and trade non-farm payrolls, please read that and give it a like. Please give it a like. I spent hours writing this. I'd like to know at least a few people. Right now, only a couple of dozen people liked it. Well, the sad thing is several hundred people have read it, so that's just lame not to click it. So if you do that, people do watch, people do care. I certainly don't have to spend my afternoon writing these for people because I already know it. So I hopefully you appreciate it. So anyways, take care, guys. I'll see you tomorrow. Love you, babe. Got to jump. Cheers.